Well, good morning, everybody, and welcome to this Make UK workshop webinar on customs special and simplified procedures. I'll take you through the various mitigations that you can put in place to help avoid some of the additional costs that might be associated from the 1st of January with your imports, particularly from the 1st of January. And towards the end, I'll talk about the special procedures with regard to simplified declarations, which can help speed up the movement of goods across certainly the UK border posts. So without further ado, I'll press on with what we're looking at today. Customs special procedures, been around a long time. They're part of the Union Customs Code, with us still currently hanging on by our fingernails as one of the 28 member states. These have been around for quite a number of years now, available to all member states, and they will still be available to UK businesses when we leave on the 1st of January. It's split into, or they are split into 4 different sections. We look at storage, which covers customs warehousing and free zones. We look at processing, inward and outward processing for goods that are moving to and from the UK to be processed. Specific use, and these are very specific in the sense of, especially with end use, temporary admission is available for goods which are maybe coming in on a temporary basis. And we'll touch on transit as well, the movement of goods to help facilitate and relieve pressure at the borders, at the frontier, and the need to actually make a customs declaration. Or hopefully, all should become evident as we get to the end of this presentation. And at that point, I can take your questions. But customs special procedures are there to allow you to store, temporarily use, process, repair goods, and get partial or full relief from import duty. So in these days when we're moving away from the EU, and anything which is leaving the UK shores will be classed as an export now, and anything which is arriving at the UK shores would be classed as an import. I know we have some variation on that with regard to Northern Ireland, and you'll see the term GB used in a lot of the Brexit publications that the government are putting out at the moment, but we'll not go into that in particular on this particular session. You might find out a little bit more about how Northern Ireland is faring in the later presentation. So we'll look at storage first, and what this can actually mean to you as a business, and how it can help A, with your cash flow from one side, and B, with actually helping to save you customs duty and import VAT in certain circumstances. Customs warehouse, sometimes and quite often when I'm speaking to people, the light will go on when they mention bonded warehouse. It's an old customs term, bonded warehouse, but it's still something that people will use. But customs warehouse essentially is suspending the payment of duty and import VAT when the goods actually arrive. If you're authorised, you can bring goods into, at the moment, the territory of the EU, but that will be the UK from the 1st of January, without having to pay any customs duty or import VAT. That is suspended at the point that you make a declaration and bring the goods across the UK border. It can be a physical location, or it must be a physical location, but not necessarily an actual building or warehouse. It's one of the special procedures that I'm going to talk about in the 4 categories that I've mentioned earlier. And these are to help support UK businesses in minimising the costs of any customs and excise duties on import. There are restrictions around having a customs warehouse authorisation. As we speak, the warehousing will only cover the storage of goods. You're not allowed to carry out anything which is considered to be a meaningful process while the goods are in warehouse. You can actually carry out some very minor activities where the product that's being stored needs to have some kind of maintenance or needs to be kept clean, but they must be incidental to the storage of the goods. So referred to as usual forms of handling. So if those products that you're storing do need to be oiled, cleaned, covered, whatever it might be. Those particular activities are not considered to contravene the warehousing restrictions. So you can do some minor repairs and, sorry, not repairs, but maintenance of the goods. It says there it's usually a building, but it can be a space or an area that your buildings or your site is actually located on, providing that that site is kept secure. But it's not unusual for it to be an actual warehouse building itself. Now, there are two types of warehouse, and certainly some businesses perhaps have seen an opportunity to offer customs warehousing as a benefit of their particular setup. Two different types of warehousing. First one it mentions there is a public warehouse. Essentially, that's where a warehouse keeper is set up to accept goods into the customs warehouse and suspend duties and taxes whilst the goods are in the warehouse for other people, for third parties. So if I was an importer, an occasional importer, and I wanted to use a warehouse but did not see the need for a long-term authorization for my own warehouse, then you can go to a public warehouse, customs warehouse, and get the same benefits. Now, obviously, there will be a charge for that. In that case, the public warehouse keeper is authorized, and you as the third party would be known as the depositor. You are the people or the business who are putting those goods into the public warehouse and have some responsibility for those goods. The other option, the private warehouse, obviously is to do with you as a business setting up your own warehouse in your own on your own site or sites if there's more than one, just to store your own goods, in which case you then become the warehouse keeper. You have the authorization for customs warehousing, and you're also the depositor. So one person in that situation for a private warehouse, you would be responsible for maintaining the records that are required for a customs warehouse, and you would also be responsible for making the declarations that are necessary to put the goods into the warehouse from a customs perspective and when those goods are actually removed. There are some criteria that you need to meet in order to fulfill the requirements of getting a customs warehouse authorization. You need to have a full audit trail of the goods as they arrive and as they are disposed of during the final process. So you need to have strong records covering the receipts of the goods into the warehouse. So your inventory system needs to have this kind of detail in order to satisfy any customs audit that might come along at a later date, or even might happen as you actually make the application. In a lot of cases, on application, the customs audit officer will come out just to check that you have these requirements in place. But I must say my experience currently is that HMRC are a little bit strapped for time and staff-wise, so it's not necessarily followed. It doesn't necessarily follow that you will get an audit at this point, but we have to wait and see for that one. But coming back to the requirements, if you're carrying out any operations, they'll ask you what those operations are, just to make sure that they don't contravene the processing aspect of it. Records for the stocks held and where they're held, but these records must be available at any time, and details of all the goods removed from the customs warehouse procedure. So you've got a full audit trail of the flow of goods into the warehouse, being held in the warehouse, any particular operations that are being carried out, and then when the goods are removed from the warehouse, you have a system in place to advise Chief the Customs computer that these goods are now out of warehouse and put to whatever use that they're going to be. The records need to be up to date. So as these occurrences happen, you need to update your records. And the last paragraph there is really around the full audit trail. You need to be able to demonstrate to customs that you have complete control of the goods in and out of the warehouse and have the relevant stock records in place to satisfy their requirements. Also under storage, we will cover free ports and free zones. Now, free ports or free zones, as they're probably called, are not something that are too familiar in the EU. It's something that is being looked at currently by the UK government For those of you who've kept abreast of these things, Liz Truss it has certain free ports certainly in mind that they're going to authorise within the UK, but there's been no real detail as to who that might be and when it might happen. But a free port is really a super customs warehouse in the sense of it's a designated area in which customs procedures, and it has a knock-on effect for other taxes and requirements for government taxes. But certainly from a customs perspective, any area which is authorised as a free zone or a free port, the goods can be brought into that particular zone. Duties and taxes are suspended, but the free port also gives the ability for the processing of any goods and still maintain the tax-free element of what a customs warehouse would offer, for example. So it really extends a customs warehouse into saying you can bring your goods into this zone, minimal customs and government information, and you could, if you re-export those goods, then at that point you will never need to pay any customs duty, import or import VAT. I should have perhaps mentioned that the same thing happens with regard to a customs warehouse. If you were to bring goods in and store them at your customs warehouse, you're authorised. If those goods are subsequently exported, and bear in mind that goods moving to the EU from the 1st of January qualify as an export, then the duty is not like you're not liable to the import duty or the import VAT. It's only when you bring those goods out for home use, i.e. Into the UK, that you need to pay customs duty and tax. So from a customs warehouse point of view and a free port point of view, if you do everything or store the goods within those zones and re-export the goods, then there's no liability import duty and import VAT. And as I said at the bottom there, one of the reasons that the EU really didn't like free ports or free zones was because of the 28 member states, and it's quite difficult to nominate particular countries within those 28 member states as free ports and free zones, because it gave them a political advantage, and they were restricted by the EU state aid rules. But once we leave on the 1st of January, it will be up to HM government to decide whether they want to go down the line of the free ports and free zones. Next, we look at processing. This is for those businesses who are either receiving goods into the UK for processing, some kind of action that they're carrying out on the either the raw materials or the parts that are coming in, which are being re-exported. So currently, as we speak, the EU is the customs border. That would necessitate something coming in from a third country outside of the EU and then being re-exported outside of the EU. But again, with the border being the UK from the 1st of January, inward processing and outward processing, which I'll explain further, become much more viable for businesses, especially those who are dealing with goods that they're processing, receiving from the EU or sending out to the EU for processing. So inward processing IP and outward processing OP look a much more attractive proposition now that we're leaving on the 1st of January. And it should be borne in mind that from the 1st of January, irrespective of what the EU and the UK might come up with by way of some kind of trade agreement, import and export declarations will still be required. That is not going to go away. So from the 1st of January, I know we have the transition period up to the 30th of June, but keeping things simple, from the 1st of January, import and export declarations will be required for goods moving to and from the EU. But for inward processing, it suspends import duties and on goods imported from outside the UK, which you're processing or repairing. So essentially, if you're authorised, you don't have to pay the import duty on import or the import VAT, providing you can demonstrate that the goods have left the UK as part of the circle. Outward processing is almost a mirror image of inward processing, in that if you're sending goods out of the UK, then and they're coming back in as a finished product, then you can get relief on the added value of those goods. It's not a total relief like it would be under inward processing. So essentially, if you were to send some goods out which were worth £1,000 to Germany to be processed, the German company were carrying out their process and sending the good back, and those goods were now worth £1,500, then on re-import into the UK, you would only pay the customs duty and VAT on the added £500 on that value. Again, you need to have an audit trail to show the goods either being sent out or being received for either OP or IP. Both of these processes cover almost any goods. The thing that you need to remember is that you must, in some way, shape, or form, be able to identify the original goods, either when they're sending them out or when they're coming back in. Not always as easy as it might sound. In an ideal situation, if everything you were sending out or everything that was coming in had a serial number, then you've got an ideal situation with regard to being identifying the goods to customs, that it's the same product going in and out. Not as easy when, for example, if you're a chemical company and you're importing raw products by way of chemicals, which don't have that kind of identification, clearly because of the nature of the goods. There are ways around that, and usually customs will look at how you're processing it, how you're managing your stock records of the individual components and chemicals that are coming in, whether there's any wastage in the process that you're carrying out, and how the end product is dealt with, what it comes up with. So there are ways around that, specifically if you can't clearly identify an individual part of that process. But the compensating product that it refers to there is essentially the product that if you're using inward processing, is the product that you produce from the original imported raw material or raw part, whatever it might be. This is one of the areas that has cropped up in some of my conversations, actually. The authorization holder doesn't need to own the goods, and that's usually because, certainly on inward processing, the goods are not yours in the first place. They're owned by a third party, and that third party is asking you to carry out some kind of process on them. IP is required in those circumstances because, just as a slight word of warning, if you don't have an inward processing authorization, there is some concern about your entitlement to claim import VAT, because some of the VAT rules, and I won't go into the VAT rules, can mean that you're not entitled to import VAT on goods that you don't own. A little bit of a minefield, something that's just cropped up for me. So IP gets rid of that problem because you're suspending the goods, even though the import duties and VAT, even though you're not the owner of those particular goods. Two types of authorization, and this is quite common for some of the other areas that I'll talk about later on. Authorization by declaration, what used to be called simplified authorization, for those of you who might have come across this in the past, essentially means you don't actually have to be authorized if you're an occasional user. You can only use it up to 3 times in a 12-month period. If you are using the declaration more often than that, you need to have a full inward processing or outward processing authorization. Now, the authorization forms for the individual processing forms are the SP3 for inward processing and the SP4 for outward processing. So if you wanted to look at the application process for that, you could put those details into a search engine and it would take you there. What I will say, and it's a point in HMRC's favour, is that they very recently simplified the application forms themselves. So if anybody's had the misfortune to perhaps look at the application forms maybe 2 or 3 months ago, you'll find that the new forms are a lot easier and a lot simpler for completion. Even though you still need to meet the criteria, it's worthwhile looking at the new application forms. that are on the government.uk website. They can be made online. There is a portal that you can make the application for, or you can download the forms and send them in by post. So how does inward processing work? Well, it's there to encourage UK business and manufacturers to get that materials from the EU or from the third country and suspending the duties until the compensating product, the finished product, is disposed of. Obviously, if the goods are imported and duty suspended, if you re-export them, there's no liability for customs duty on import and VAT. But if you supply those goods within the UK, then you will then need to make a declaration and pay any UK customs duties and be liable to any VAT if that should happen. So exports means you don't actually have to pay the import duty. If you're processing and sending the goods to it within the UK, then you will have a liability. But processing covers anything from simple repackaging to some really in-depth full-scale manufacturing processes. The compensating product I've touched on is the final product. The key point to mention here is that if there is any byproduct which is referred to as secondary compensating product, if that has a value, then you would still need to make a customs declaration, and if the goods are being exported, then of course you have no liability. But in some instances, such as, for example, scrap metals, if you're making something from metal sheet and there are offcuts of metal which are sold in the UK to somebody, then they have a liability, and the declaration needs to account for the VAT and the duty on those compensating products, whatever they're sold for. Outward processing is almost a mirror image of inward processing. If you're sending goods out, if those goods are of UK origin, you've manufactured them, or they're duty paid in the UK, the theory behind it is, why should you be paying import duty on a product that originates from the UK in the first place? But you do need an audit trail to satisfy customs that the goods that you send out and the finished product that comes back in are associated, it's the same product, and you can then only need to pay the import duty and VAT on the added value. In the same way as inward processing and outward processing, you can use authorization by declaration without having to have a fully fledged authorization in place. But again, you're restricted in how many times you can actually do that. It's talking there about the temporary export of goods. They're always intended to come back. If they're in free circulation within the UK, or they're manufactured here, you want to get the relief from any duty you might have to pay. It is important, actually, as it mentions there. Currently, the UK global tariff has quite a significant aspect of zero or nil rate of duty on goods that are coming into the UK. Now, that might change in due time, but at the moment, you would need, the first thing to do, I would suggest, is look at your commodity codes. If there's a nil rate of duty on those goods, that when they actually come back into the UK, and you need to bear in mind that the goods going out might have a different commodity code to the goods that are being returned. But if that's a nil rate of duty, then HMRC won't give you an outward processing authorization, because there's no financial benefit to the business to do that. Any VAT that was charged on the import of the finished product would be reclaimable in any way. So there's no fiscal reason or economic need, as it says there, for you to have that operation. So that's something to bear in mind if you're sending goods out for processing. Moving on to specific use, and as the title says, this is essentially around very specific areas. It covers two distinct areas. Temporary admission. Temporary admission is for goods that are coming into the UK. Nothing is going to be happening to those goods. There's no process on them, but they are never intended to remain in the UK. If you think about goods that are arriving in the UK, for example, for an exhibition of some description, works of art going into an art gallery for 6 months to be shown and demonstrated. Those goods were never actually intended to remain in the UK. You can import those under temporary admission, providing you re-export them, given the conditions that you've agreed to with HMRC. And note that the duty is suspended, providing the goods are re-exported, then there's no duty or VAT to be paid. It does cover all of the usual charges that might be made. Customs duty, I mean, the CAP situation, the Common Agricultural Policy, really is an EU-wide facility, which, again, I've not heard a great deal about, but I would suggest that if there's no deal, the UK will not remain as part of the Common Agricultural Policy. But if there's any additional duties like anti-dumping duty or countervailing duty, the VAT and excise duty will all be suspended if you're bringing goods in under temporary admission, which were never intended to remain in the UK once they come in. I've touched on this earlier. You can use authorization by customs declaration, as it's referred to. And the usual requirements, as it says in the bottom there, is you can only use that method 3 times in a 12-month calendar year. It cannot exceed an individual import value of £500,000. If you do exceed either the number of times that you're going to use that, or the import declaration is over £500,000 in value, then I'm afraid that you actually need to get a full authorization at that place, in that situation. And the temporary admission is another one of the SP authorization forms, which you can get off the gov.uk website. End use is probably even more specific, and just by the nature of its description, it's designed to aid certain types of businesses who are involved in only certain kinds of aspects. So if you look at getting an authorization, the goods must be put to the prescribed use that you're authorized for. I'll talk about the individual types of relief that you can get, or the business areas that you need to be involved in to get end use. It's quite niche, and some of you who might be in these areas may or may not be aware of the availability to get duty relief if you're importing goods for manufacture in the certain sectors. I'll talk about that on the next slide or so. You must be authorised, be established in the UK, and be resident or trading in the UK. You have to be able to demonstrate the HMRC that the goods were put to the end use you're talking about. So they will be perhaps on order, be looking at that. And you must have records to identify which goods you're claiming the relief for, and demonstrate to them that the goods were put to the use that you've applied for. And I suppose this is the main area that you may want to be up to speed with. Goods which you can use and claim end use relief for if you're involved in the manufacture of civil aircraft and parts, manufacturing shipwork and goods that go into the manufacturing of ships, marine propulsion engines, hydrocarbon oils if you're in that business, cheese if you're processing cheese. If you're catching fish and processing it, then again you can apply for end use under that particular action. And parts for the industrial assembly of motor vehicles, you can claim duty relief on import, providing you get authorised by HMRC, and you can demonstrate to them that whichever aspect business-wise you're involved in there, you can satisfy them that the goods are being put to the end use that the relief applies to. 2 types of authorisation, I've touched on these, authorisation by declaration and full authorisation. So you can use up to 3 times, you can use end use, but once you do that for the 4th time in any 12-month period, the HMRC may actually prevent you importing those goods until you have an authorisation in place. So please be aware that if you're using it once or twice a year, you've not got a problem with authorization by declaration. But if you're likely to be using it more than 3 times, I would suggest you go for the full authorization. Now, we talk about transit. Transit's the final part of the special procedures aspect. And transit is, as we speak, relatively niche area. Isn't huge on the radar of HMRC, although it is quite often used. But post 1st of January, it's something that probably will be more in demand from businesses wanting to move the goods from the EU to the UK, or from the UK out across into Europe. I think it's probably a good starting point is to say that transit is a separate system from making import and export declarations. It runs parallel to domestic import and export systems, Germany, France, the UK, and it manages the movement of the goods outside of the customs declaration mainframe computers. It came about because of the location of Switzerland. If I can paint the picture, because of where Switzerland sits within the EU, and they are not an EU member state, goods that were transiting from, say, France to Austria through Switzerland, or goods that were coming from Germany to Italy, if the quickest route was directly through Switzerland, without transit, there would need to be an export declaration from, say, Germany, an import declaration into Switzerland. The truck would drive straight through Switzerland, out the other end, and make an export declaration out of Switzerland and an import declaration into Italy. That sort of puts it into a nutshell. Well, transit was brought about and because of that particular onerous situation, and it actually manages the movement of goods, which are for countries who are signed up to the Common Transit Convention. It enables them not to have to make that number of declarations. It also relieves the need for a declaration at the frontier. Goods can cross the frontier with a view to actually having the declaration made at a final destination. The thing about transit at the moment is you need to have a guarantee in place, and I'll talk a little bit about guarantees a little bit later on. But you can see that the UK perhaps is going to fall into a sort of Swiss area in the sense of Ireland, UK and mainland Europe, in the sense of goods moving from Ireland through the UK onto the continent. At the moment, there's no problem with that because we're one of the member states. When we leave, we'll become a sort of mini Switzerland, in that the goods will be leaving the EU and then re-entering perhaps through Dover, Calais route. The UK signed up to the Common Transit Convention, so transit is still an option. I'll explain how it works as we go through. In its very basic form, if you wanted to use transit to move your goods, and for example, not have to make the import declaration into France, but you're sending the goods may be actually leaving the EU, but if you are sending goods to, say, Germany, then you can opt to make that customs declaration in Germany rather than at the French border, relieving the pressure on the border there. Now, in its very basic form, you would need to report the transit declaration to a border post within the UK and present those goods to customs. And similarly, there would be a border control post in Germany that your driver would need to report to end the movement from a transit point of view. You can get around that by becoming authorized within your own site or your own premises. So if you're sending goods out, you can be authorized as what is referred to as an authorized consignor. It would mean you can send the goods from your premises if you're authorized, without the need to have to present those goods at the border for a customs officer or office to actually check that the goods qualify or check that the goods are okay. And from the other side, if you're receiving goods, you can actually have authorized consignee status, which again means that the goods can be transported directly to your premises rather than having to be cleared at a nominated customs border post. So on both sides of the fence there, being an authorized consignor and an authorized consignee in a transit movement makes everybody's life a little bit easier in that the goods can go from one premises directly to a company in another EU country or beyond as authorized consignees. Takes away the need for the journey, the logistics to have to divert to a customs post. In order to use this, I've talked about, I mean, for those of you who are familiar with CHIEF, the customs handling of import and export freight, that's the UK's mainframe customs computer for all import and export declarations. The Germans have an Atlas system, which is non-compatible with CHIEF, for example, so that the two systems, in fact, none of the systems within the EU, 28 member states, are able to speak to each other directly. So the new computerized transit system is a separate electronic declaration system with its hub in Brussels, which is able to pass messages from all 28 member states, or all of the, not just the 28 member states, because the signatories to the Common Transit Convention all have access to NCTS. This system manages the movement of those goods by declaration throughout the EU. And there are specific requirements, but you have to make a customs declaration in regard to movements under NCTS and customs transit, or common transit as it will be known once we leave the EU. So in a nutshell, it enables the movement of goods, providing you're signed up and authorized to use transit and you have some means of access into NCTS, the new computerized transit system. You can move those goods. Hopefully, in theory, what they should do is clear the EU borders a lot more quickly, because the movement is covered by the transit movement, and import and export declarations are made at the final destination, rather than having to show that the import and export declarations have been made. There's a document which follows the movement of those goods, so the system can be checked by any of the signatories to the Common Transit Convention, just to check that this movement is satisfactorily being managed under transit. Now, I've talked about guarantees briefly, and you will need a guarantee at the moment for transit unless you can apply for a waiver. I've had to drastically sort of reduce the slides that I would put up for guarantees and the different types of guarantees that you can put in place, in particular the CCG, the Customs Comprehensive Guarantee. As we speak, HMRC have announced through the border operating model, for example, that they're going to suspend the need for guarantees to be in place for duty deferment accounts, for example. Any of the special procedures that I've talked about. I'll talk about simplified procedures in a second or two with regard to simplified declarations and transit. So you would normally have to put in place guarantees, because ultimately for all of those procedures, the duty that HMRC would view as being at risk because you're not paying it upfront, or the duty payment is being suspended. But currently, certainly for special procedures, the new application forms indicate that unless HMRC dictate otherwise, there won't be a duty requirement, a guarantee requirement, and also for duty deferment accounts. So any of you who currently have a duty deferment account where you're paying for a guarantee to be in place, you can apply to have that removed. But if you're applying for a duty deferment account or a special procedure now, you would not be asked to put a guarantee in place unless HMRC saw your business as a particular risk. So watch this space with regard to the guarantees. Individual guarantee, if it's just one movement, you can put an individual guarantee in place for that movement, one movement. But I talked about the CCG, Customs Comprehensive Guarantee, which is a permanent arrangement for movement of goods in different aspects, different special procedures, duty deferment account. You can have it all under one umbrella on the CCG, but again, you can apply to have those guarantees waived if you meet certain criteria. And that is something that has just recently been announced by HMRC. I'll talk a little bit about authorised economic operator, which is the trusted trader authorisation. I noticed last night on the news with regard to Northern Ireland, there was the authorised economic operator stroke trusted trader status was mentioned again. It seems to have been a little bit quiet recently on this status, especially I suppose because HMRC are offering certain kinds of temporary facilitations which would normally only be available if you were an authorised economic operator. But we'll talk about the trusted trader status. AEO is the UK and the EU's version of trusted trader. There are two different types, customs simplifications and security and safety. Both very different. Customs simplifications essentially covers the processes and systems that you have in place to make sure you're paying the right amount of customs duty and VAT. You have systems in place to ensure that the declarations that you're making are accurate. If you have any authorizations, that you're managing them properly. So customs simplifications is really around fiscal processes and keeping HMRC happy that you're managing your import duties and VAT values, etc., to their satisfaction. Safety and security is separate and different in the sense that it's all around the physical security of the goods that you're putting into the international supply chain. So if we looked at exports, you must be able to demonstrate the customs that you're keeping those goods that are being exported in a secure fashion. You have access controls in place, so on and so forth. You can have either of those particular authorizations, or you can have both. It really depends on what benefit the business is actually going to derive from having those authorized in place. But some of the benefits there, obviously, the business is seen as compliant and trustworthy. This is the trusted trader reference that you'll see politicians refer to. A reduced risk rating with HMRC. They put you in that category, so they should, in theory, be dealing with you a lot less often than they are with the businesses and the entities that they're not familiar with. If you're applying for a special procedure and you have, for example, AEOC, that application should be fast-streamed and you should, in theory, get that authorization a lot more quickly. Now this, I put a question mark, I had to put a question mark against this. Quick release of intra-EU goods post-Brexit. This would refer to safety and security. If the EU and the UK agree to recognise each other's AEO status, and there really isn't any reason why they shouldn't do that, seeing as we've been part of the same system and process since 2008, and the EU have looked at the UK's processes and the way they're dealing with it on a regular basis. They've been audited. I can't really see why they wouldn't, but if you were an AEOS, for example, and the EU and the UK do agree to recognise each other's trusted trader status, then in theory your goods should be stopped, should not be stopped at the borders for any routine inspections. You're a trusted trader, and that's what the mutual recognition agreements that are in place at the moment should actually afford to UK companies. So preferential treatment for global import and export under mutual recognition, but it's only for AEOS, the safety and security. But again, we're in a situation with regard to the mutual recognition of these different aspects of the different countries' customs authorities. We're in a little bit of a limbo until these things are signed off. But it does say there, and I touched on this earlier, as an as an AEOC, you can get a reduction or waiver of a lot of the guarantees that are normally put in place for non-AEO traders, but the UK government at the moment are affording those kind of facilitations on a temporary basis to all UK businesses until Brexit's over and the dust is settled on the movement of goods, if that ever happens, to be honest with you. Finally, looking at simplified procedures. Now, you may have come across simplified declaration procedures in the sense of, if you've looked at any of the special procedures or simplified procedures that are going to be in place from the 1st of January up until the 30th of June, whereby you may want to suspend having to make an import declaration for goods which are coming from the EU. I should emphasise, any goods that are still coming from third countries, you still have to make import declarations in the same way that you would as we are speaking at the moment. But the special facilitation is available up to the end of June to delay any import duties for that period. Simplified declaration procedures are available for both imports and exports, but I'll concentrate on imports here. Essentially, there are two different types of simplified declaration: entry and declarants records and the SMP system itself. It really gives benefit in that the goods, if you're authorised or your agent is authorised CFSP, then you can speed up the movement of goods across the border, and HMRC will rely on what they refer to as post-clearance audits. So they will allow the goods to clear very quickly, allow the goods to get to into the UK premises, and if they have any issues, then that would be cleared up on a post-clearance audit. It's very popular, and is likely to become more popular with us once we leave the EU. These are the options for you as an importer. You can self-representation. You can be authorised for CFSP, and you will be responsible for making the import declarations, which is not as easy as it sounds. And perhaps on the next webinar that we do on the 18th, I believe it is, I'll go into how the requirements of making a customs declaration in a little bit more depth. But if you're using an agent, that can be under direct representation, whereby the representative acts in their own name on behalf of the importer. So as you as the importer are wholly responsible for any debt. That's the direct representation route. Indirect representation, which is now becoming more talked about, if not, I wouldn't use the word popular, but it's certainly becoming more talked about, is where the agent has joint and several liability for any of the debt. They're taking some of the responsibility for making sure the declarations are accurate, etc., and will be jointly and severally liable. But that can be a tricky bump in the road to get over between you as the importer and your representative agent. But it's worthwhile having a talk to them. But under CFSP, Customs Freight Simplified Procedure, the first aspect of it is that there are different stages. An initial simplified frontier declaration with very basic information is input into Chief, and Chief allows those goods to move. Later on, a supplementary declaration is made to complete all of the full details that are required on an import declaration. And bear in mind, you have to be pre-authorised to use CFSP, and HMRC have to be satisfied that you're in a position to be able to manage this to their satisfaction. Once the simplified frontier declaration is submitted, the goods can be taken away into free circulation, or they can put to any of the special procedures I've talked about. Supplementary declaration catches that up later on to complete the full picture for HMRC to square the circle, if you like, and that particular movement is finished. The other option, and this again needs an authorization, is entry and declarants records. And this is what you may have come across that HMRC are offering for businesses from the 1st of January to the 30th of June. It's a type of entry and declarants records. The transitional arrangements that HMRC are publicising are really without authorization. If you wanted to be using entry and declarants records on a permanent basis, you have to be authorized for CFSP, and you have to ask for authorization for EIDR. From the 1st of July, you will not be able to use the current relaxation of not being authorized, but simply entering the information in your records. But under EIDR, there's no frontier declaration is required. You simply put the relevant details into your internal electronic records, which must be kept up to date. You do need to notify HMRC that you've done that, and that can be an email, or there is an alternative for fully inventory linked ports. There's a Form C21 that you can use in that relationship. But in one way, shape, or form, HMRC has to be notified that you've put that entry in your records. And again, much like the simplified declaration procedure, it's caught up by a supplementary declaration no later than the 4th working day of the following month in which the goods were entered into the records. So that supplementary declaration, again, would square the circle and finish off the complete entry. Now, you can be authorized to do that, or you can use an agent, something which is quite common at the moment, a third-party agent who has the CFSP authorization in place. But obviously, one of the conditions of using CFSP is that you have a duty deferment account in place. So you would either have to use your agent's duty deferment account or put your own duty deferment account in place before you could actually operate that system. I think with that, I think we can move on to any questions that you might have.
Thank you very much, Keith. So moving on to the first question. Some of our imported goods will be exported after processing, but we don't know at the time of import. If we don't use IP, can we still claim duty back on the export?
Right. Okay. So goods are coming in. If they're coming in from the EU at the moment, there is no import duty to be paid because we're still one of the 28 member states. I'm sorry, I might be slightly missing the point here. I'm
assuming that from the question that they're coming in from the EU, so and they'll be exported after processing. But when they're bringing the goods in, they're not absolutely sure if that good is going to be exported.
Right. Well, at the moment, if you've already got the goods in, then there is no duty. So there's no liability on you for bringing the goods, say, from Germany to the UK. If those goods are going out post 1st of January, then obviously there's the export from the UK isn't an issue because there's no duty, there's no tax liability other than being able to prove the goods have left for VAT purposes. But the pinch point there would be the import back into the EU and any duty that was payable on the import of the finished product into the EU. Now, I would guess that would be the responsibility of the customer in the EU country. They would, in those circumstances, there's no need for the UK company to be IP authorized because IP suspends import duty and VAT when the goods are brought in. Goods are already here, and there hasn't been any duty or VAT charged because we're still a member of the EU. The pinch point becomes when the goods go back into the EU, the finished product, and that would be down to the EU company to get themselves authorized for outward processing, for example, so that when the goods went back in, if they're not already authorized, you get the feeling that they're probably going to be stuck until they do get authorized with any import duty. Well, the VAT wouldn't be a problem because you can always reclaim the VAT, but the duty might be a sticking tax to the third party, the business in Germany. Does that make sense?
Thanks, Keith. Thank you.
Another question. Do customs warehousing arrangements / inward processing mean that UK tax and duty is only paid on the added value gained from the processing activity? How is this calculated if it is simply repackaging? And when are charges payable?
Yeah, two different things there. On the customs warehouse, you're not allowed to process anything. So the goods that are coming in must be the same goods that are leaving. So there shouldn't really be any real change in value. The fact that you're putting something in a plastic bag really doesn't change the value of those goods. So the customs warehousing shouldn't be an issue. Goods in, goods out, same product. The thing about inward processing is you can import the raw materials, take 6 months to process those goods. If you re-export then there's no duty. But let's just paint the picture that if you're bringing those finished goods and selling them on the UK market, inward processing, when you apply for to be authorised, asks you if you want the option of declaring the duty on the original imported raw materials or the subsequent finished product when the goods are removed. And you can select that based on the customs duty. So if the raw material, the widget that you import initially into IP, the duty suspended, if that's a nil rate of duty, but the finished product that you actually bring into home use into the UK has a 5% duty on, you can opt to pay the duty or have the duty allocated against the original import. So there's about, you can choose that, and obviously everybody's going to go for the lower duty rate, but inward processing gives you that option. Yeah.
Thanks, Keith. Another one here. Can we apply for PI authorization if we buy import metal sheets from the EU, which we decorate in the UK and stamp out into tins and lids, etc., and then sell them back to EU customers? Obviously, some of the raw materials, the metal sheets, will be used for UK customers and other worldwide countries, but some will be for our EU customers. In that case, what processes should we have to be able to apply for IP authorization?
Well, yeah, I mean, IP is in place precisely for those situations, if you like. In a very basic level, anything you're importing, and bearing in mind from the 1st of January, anything coming into these shores is an import. If you're processing those goods in whatever way, shape or form, and the manufacturer from some kind of tin plate or steel plate of whatever it is it might be is perfectly acceptable process. You import everything that you're going to process under IP. How you dispose of it is then down to you as an inward processing authorized business. So if you're sending them back to the EU, then there will be an export declaration that you will declare for those particular goods. That will mitigate the duty that you suspended. There'll be no need to pay that. If it goes to a third country, then that's an export too, and there's no need to be able to have to pay the import duty and VAT. And if you, the third option, if you bring those goods out and sell them in the UK, there's another declaration to be made to tell Chief that you've brought those goods out of the inward processing system into home use, and that declaration will determine that you must pay import duty and VAT at that point in time. So from the business point of view, who's authorized, you just need to be able to demonstrate or explain to HMRC what your process is or what your processes are, because you might have more than one. And the application asks you how many processes you've got. And if you've got 2 or 3 different processes, it asks you just to explain those. But as long as they all qualify, you get one authorization to carry out all of those processes, and you only need to account for anything duty and VAT wise if you're bringing them into home use. But you must have an audit trail to demonstrate that these elements were exported to the EU. These were exported to third countries. These goods were brought into the UK, and here are our declarations which show that to customs that we've paid duty and VAT, should that be liable to that. Yeah.
Yeah. Thanks, Keith.
Thanks, Keith. Will temporary admission remain the same post end of transition?
Yes. All of the special procedures that have been in place, I think it's a good point to start saying, look, I know I did mention it. The import and export declaration system for the UK is not going to change. If we ignore for the time being the special provisions that the UK have put in place between January and June, from the 1st of July, if we use that as a cut-off point, import declarations will be made in exactly the same fashion as they have been for decades in the UK. Export declarations will be made in exactly the same fashion using the same system for exports. All of the special procedures that are available and have been available again for decades to UK businesses will be available in exactly the same format post-Brexit. So all of those special procedures, all of those facilitations, AEO included, are still available. There's nothing really changing at the moment in regard to that. The only real difference is we're moving away from the EU's regulations and law, and we're adopting UK regulations and law for customs purposes, but they're going to be identical. I've used this phrase before. The UK is looking at the Union Customs Code, which is the EU regulations, bringing it across to the UK, rubbing out the initials EU, and going to be inserting the initials UK. Certainly for the foreseeable future. It'll be further down the line if the UK customs authorities decide they want to change something. That's certainly not going to happen in the short term. So I don't think we need to worry about any of the specifics of the special procedures changing. It is what it is now. It will remain available in the same after Brexit.
Thanks. I believe that we can apply for IPSP3. Will my overseas customers need to know this, and do they have to declare anything? So this company, goods come to us, we process them, and we send them back.
It may be a good idea to let them know that you're authorised for inward processing, but really from the 1st of January, the EU business will need to make an export declaration for the goods leaving the EU. So that would be their responsibility. It shouldn't be a difficult thing for them to do. The only additional cost to them would be the actual cost of an agent putting that declaration on their behalf, whatever that might be. I suppose that it's not a tricky bit, but who is responsible for the import declaration becomes key here. If, for example, your supplier of the goods for you to process was delivering them duty paid, which means they are responsible for getting the goods to you in the UK, then they will have the responsibility for the UK import declaration. They'll have to have a GB EIDR number, for example, and have somebody in place to make that import declaration. We're starting to get into some tricky areas here, but if you as the UK company are responsible for making the import declaration, then if you're IP authorized, you simply put those details onto the import declaration. You have a customs procedure code, without going into too much detail, which suspends the duty. So from a UK point of view, when the goods arrive, a declaration needs to be made to show that you are IP authorized. Chief will recognize that, the customs computer, and not take any duty in the import VAT from you. But one of the key areas here for this particular scenario, who is going to be making the import declaration? Who is the importer of record? That needs to be discussed between the two parties to establish how that's going to be done.
Thanks.
Next question. When sending goods, if the goods have to go through multiple customs stops, do you get charged per inspection?
I'm wondering why there might be the need to go through multiple customs stops, because what I'm looking at here is, come the 1st of January, the UK is a third country. There's an export declaration need. We can park that needed. We can park that one. If there's an import declaration into the EU, that must have been made using an EU EIDR number. And there are various different ways that a UK company can get that EIDR number, or the customer within the EU could be the importer of record. I don't really want to go down that situation, but if the import declaration is made and accepted within the remaining 27 EU member states, then those goods can move across all member states to its final destination. The goods have been declared as an import into the EU. So I'm a little bit vague as to why you might, or the question, I might think that there are different stages of customs borders, because once we leave the 27 member states, the customs border are those 27 member states. There are no real internal customs borders. That's why currently, with the UK being part of that border, goods can be imported into the EU from any country and simply hop on a ferry and come to the UK. There will be no customs stops for that. Yeah.
Thanks, Keith. We're importing goods from the EU on a regular basis and export to Asia, but without any processing. Can we use temporary admission procedure for those goods and not file declarations or pay duty and import VAT?
You could, I suppose you could use temporary admission, but temporary admission has certain requirements. You need, it's not really for goods that are coming and being stored. It's not suitable, I should say. It's not designed. I think under temporary admission, you only have 90 days initial storage. You can apply for more under different circumstances. But for me, that circumstance would warrant a customs warehouse. You authorise for customs warehouse, and you would still need to make declarations into the warehouse. You can store the goods for as long as you like in a customs warehouse, and if they're re-exported, then there's no duty to pay. You suspend the duty. And when I say a customs warehouse, you can leave them in for an infinite time. You can literally, you could leave those goods in a warehouse for decades. So really looking at temporary admission, you have to have the knowledge that the goods are coming in under a temporary basis, which it sounds very much like the member may have, but you have to have an end date when you know those goods are going to be leaving the UK territory. So the circumstance might need further investigation, but it probably wouldn't fit, because temporary admission is not doesn't require the complication of, well, we're bringing goods in, we don't know when they're leaving, but they will be leaving eventually. I think I would probably need a little bit more discussion on that one.
Thanks.
Okay.
We simply buy materials from the EU, process them into metal packaging and sell them worldwide, including UK and EU. I am thinking to apply for simplified VAT accounting so we don't have to pay VAT on the imported raw materials from the EU. Would we also need to apply for customs warehouse to delay paying the duty?
In those circumstances, I wouldn't be looking at customs warehouse. It's just by the nature of what's been described. You're processing goods, you're importing raw materials, and you're re-exporting them and supplying within the UK. Inward processing is designed for that. Inward processing suspends any duty and any VAT on import. And I think I explained that as we went through. That is only payable when you remove goods from the inward processing procedure to sell within the UK. And that would be the point at which you would pay customs duty and the relevant customs duty and the relevant import VAT. So IP would seem to fit that scenario perfectly, really. But SIVA, Simplified Import VAT Accounting, is really a relief from the need to put a guarantee in place for the VAT element of your duty deferment account. Without going, again, I don't want to confuse people too much, but if you've got a duty deferment account in place, it covers import duty and VAT, and customs take the payment from you once a month. You still have to pay that. You can have the VAT element of that guarantee removed by applying for SIVA, Simplified Import VAT Accounting, but that's all it does. It just removes your responsibility for a guarantee to be in place for the VAT element, which is always higher than the duty element on import. But bear in mind what I said previously. HMRC came out with a publication in October, roundabout, might have been the 8th of October, which said anybody applying for a duty deferment account now does not need to put a guarantee in place, and anybody who has an existing duty deferment account with a guarantee can apply to have that guarantee removed. And that's a cost to a business, by the way.
Thanks, Keith.
Another IP question. We were planning on applying for IP for repair, but we have no duty on our products, therefore we don't need to do this anymore. What value should our customers state on paperwork? The full list price, or would half value be acceptable?
Valuation, yeah, it's a very important aspect, even though the duty is nil or is being suspended and probably won't become due if you're re-exporting under IP. But the value, as far as customs concerned, has to be what I would describe as a market value. You can't just attribute a nil or a £5. It has to be a considered value that would be applicable to those goods were you to sell them rather than being sent through for a processing. So the cost of a widget being sent through to a UK company should be, and the business would need to prove this to customs, that the value that had been attributed was a realistic value. And there are 6 different stages that you can go through to value your goods. The first one is a transaction value, but in this case, where there isn't an invoice following the movement of the goods. So if I was buying something from Germany for £1,000, and it was delivered to my door, that would be the value. That's the transaction value. Where you don't have a transaction value, then you have to start looking at what would be the cost import-wise of identical goods or similar goods, and you go down that process. It's a little bit more tricky, and you have to have a considered value on the import declaration to show customs that it's a value you've arrived at by fair means. So be careful with that one.
Thanks, Keith. This will have to be our last question, but we will aim to get any outstanding questions answered after the webinar. So the last question is, we import yarn from the EU and export fabric woven from it to the EU. Is duty only payable on the added value? Yarn represents about 40% of the value of the product.
Right, there's 2 things here. If you're importing yarn from the EU, and making a product from that, weaving it, whatever, that's a process. You should be authorized for inward processing, and you would get the relief from the import duty for the goods coming in. Now, the added value is the outward processing side of it. Now, that is the responsibility of the EU supplier. They're sending out yarn which is valued at whatever yarn is valued at. If they don't want to pay the full import duty when the goods go back into the EU, then they have to be authorized for outward processing relief. It wouldn't be incumbent on the EU company because the duty and VAT, they would suspend it by being IP authorized. When they re-export, they discharge their responsibility under IP. And from the UK company's point of view, that's the end of it. The problem beyond that is the import back into the EU, because there'll need to be an import declaration made back into the EU. And there are only 2 ways that I presume, having said that, I'm probably presuming too much that the finished goods were going back to the original provider of the yarn. Maybe that's not the case. Who's responsible for the import duty going back into the EU? If that was the original company who'd sent the yarn, they can be authorized for OP and reduce the liability of those goods going back in. But and it's just occurred to me, perhaps their inquirer was saying, well, we sell those goods in the EU rather than sending it back to the original supplier of the yarn. Then there is the value of the goods going back into the EU is the value of the goods. So the finished product that goes back into the EU, there's no relief, general relief for those goods going back into third parties and not the original supplier of the yarn. I hope that makes sense.
Thanks very much. As Aaron said, we're going to make sure that the questions that haven't been answered will be answered by Keith afterwards, but do bear with us because I can assure you there are lots and lots and lots and lots of them. Sorry, Keith.